All right, let's talk futures. Joining us live today, the Fibonacci Princess, aka Trader Tammy. How are you?
I'm doing great. How are you doing today, Jim?
Pretty good. Now we're kind of neighbors, me and you, right? You're in Georgia,
Right.
I'm in South Carolina, and the hurricanes treat you okay?
Yeah, Hurricane Helene was rough. I'll have to be honest with you, but not nearly as rough for us as it was for many. So we consider ourselves very blessed and grateful, but probably the scariest hurricane I've been through personally before.
Yeah,
And then Milton ended up being a non-event for us, and there again, a lot of others were affected. So, but
yeah, and yeah.
that's island life, right?
Yeah, I know. I lucked out. We both missed us with quite a bit of margin, so
Oh, I
we're
was
not out of the woods
wondering.
yet, though. We got six
Okay.
more weeks though of this the season, right? The hurricane season they call it.
Seriously, if you came to our house right now, you would see the big water barriers still up. That
Oh,
my husband was like, "I'm not planning on taking those down," and I said, "I don't blame you," because we're right by the marsh. So big
yeah.
enough storms, we can flood if, but we haven't since we lived here due to his efforts of putting up big flood barriers.
There he goes. He knows what he's doing to
He
protect
knows
the
what he's doing.
homestead. Yeah, that's awesome. So anyway, well, thanks for being here with me today. I know you're usually with Tom, and we've been talking markets all morning long. We had Traders Club this morning, and love to get your take on some of these key futures markets that we've been looking at.
Awesome, sounds great.
So you got even the S&P up on the screen right now?
Yes, that is correct. So, we're still holding, obviously, we're still looking for the targets from that 5th of August low, which, just seems like it was forever ago. I feel like I've been saying, here are the targets for a long time. And the first target off of that. So let me get some crosshairs here so you can see what I'm talking about. The targets always line up with whatever low they are from. And, another thing I can do is use this blue line right here.
Hmm.
So that is where you see the targets. Target one is 59.52, and the second target is 61.65. But something that's great about my work and that I do and that I love looking at, and this is why people would love, need to use Fibonacci as part of their trading tool, one of their trading tools, is even if someone missed that initial entry off that 200 SMA on the 5th of August, there's a lot more opportunities on the way up to get bullish. And so that is one of the reasons why Fibonacci work is such a great thing. And now at this point, once we get to that 59.52 area, I'm going to start getting a little bit, you know, more shy about getting bullish because we will be super extended. But as long as all the moving averages stay on the side of the bulls, I'm going to still keep setting up the pullbacks until they don't work anymore.
Okay, so every time these pullbacks come back, that's another opportunity to get long.
Absolutely.
Got it.
I'm sorry. Oh yeah, the
Cro
crosshairs. Sure.
Yeah,
Sure. Yeah.
there we go.
Thanks.
All right, all right. Okay, so we got target one, we got target two. We were kind of joking off screen about, is 6,000 a slam dunk for the S&P, and then Goldman Sachs comes out and says, well, 6,200 by the end of the year. And so you get these kind of, I don't know if they're almost like a random idea or not, but I like where your target two is because it's close to that 6,200.
Yeah. So if you're talking, if we're talking about SPX cash, of course, that is a chart that I run, and we've already met the first target off of that larger swing here from the 5th of August low. That second target is at 6,009. So I guess what they're basically saying is that we're going to push through that and actually go a little bit higher. I mean, that's only 400, it's less than 400 points, what, 350 points? I don't think
Yeah.
that's irrational, not with the way this thing moves these days, right? I remember when 10 or 15 points was a big deal, and now that's
Oh,
that's an
yeah.
hour, right?
Right. So let me ask you, so at what point in time would you adjust your fib analysis, right? I think you're starting this one on August 5th, is that right?
Yes. So, well, every time it has a pullback, you know, I look for another entry. Um, or I should say I set another entry up for my clients, and using Fibonacci work, that is something that you can also do for yourself. Um, though, but when it gets extended, I basically just say, I'm not saying don't buy it anymore. What I'm saying is don't buy right at it. Okay. Look for a previous pullback that's similar to some of the other pullbacks that we've had. That's why we
Yeah.
call it symmetry. Now, some of these are huge, right? I mean,
Yeah.
that pullback from the 16th of the July to the 5th of August, we did have support on a continuous chart. But of course, the data starts getting a little bit broken on these contract charts. As you can see back here, I heard you talking about broken data earlier on something that you were looking at, and that
Yeah.
happens too. And whenever I've got too much broken data, I can't use the work that's too far back. But I did go to a continuous chart and was able to find, symmetry from that. Plus, it was a 786 retracement, plus the 200 simple, which when it bounces off the 50 simple or the 200 simple, those are, to me, that's basically a rule of mine when it comes to trading.
Okay.
But anyway, what I'm saying is I don't want you buying right at the top. I don't want you looking at a 10 or a 30-minute chart and going, hey, I'm going to buy. And unless you know what you're doing. I mean, if you know what you're doing, you can set some stops and you can get in and out real fast. That's fine. But if you're the type to get up and go get a cup of coffee and then go work in your garden for an hour, please don't do that when it's extended. Because
Got it.
usually when we get extended is when we see those really big pullbacks. I mean, you can see that last time we were really extended here. This is that huge swing back here. Okay.
Hmm.
We met both of the targets on the upside and finally got up to that 16th of July point and had that really pretty massive pullback.
So at what point, though, if there was a big trend reversal, what point would the targets then be lower, right? In other words, we're getting short. We're going for a target on the south side.
Yeah, well, that's when I use a low to high project, like retracement projection. Okay, is extension is what you can call it.
Okay.
So, say right now that the high is in place from the 17th of October, and I wanted to say, okay, I'm going to short off of those price extensions. I do not recommend that because that's a counter trend trade. But if you make money with trend trades and you're good at counter trend, that's fine. But if I said, hey, I'm going to short off those price extensions that I've got right now that are going in 59, around 59.37 to maybe 52 or so, I would go that low to this high. And the extensions from that short, if that 17th of October high was in place, would be 58.28 and 58.02. It just depends on which you're talking about, right? Because the extensions from the 2nd of October low to the more recent high are all the way down here at 56.68 and 58.598. So it depends on what swings we're looking at as
I
to
got
where
it.
the extensions are going to be, of course.
Right. Okay, that makes sense. That makes sense. I mean, right now it's clear. I mean, clearly we've been in a bull market for quite some time.
Yes, absolutely. Absolutely. I mean, it's been awesome. I just, I just kept feeling like we were floating on air. It's been an
Right.
uncomfortable bull market for me
Right.
personally. I've been bullish, but just kind of scratching my head every now and then. But that's why
Yeah.
it's good to look at the technicals and sometimes try to steer away from the news.
Right. Okay. So that was my next question. I mean, looking forward here for the end of the calendar year, we have an election coming up. We have the debt ceiling that has to be dealt with. We have a continuing resolution maybe to keep employees, government employees working, and these all happens at the end of December. So those are kind of big topics, and along with the overall debt situation that I think Janet Yellen's going to talk about today or has talked about today
And that little tiny presidential election.
in the little tiny presidential election. Right. Um, but when you put fibs up like this and you're looking at a longer term point of view, do you care that much about the news?
You know, for me, that's a tough one. Personally, what I have learned is to try to just pay attention to what the charts are telling you.
Yeah.
Um, because even if you get a big movement off of news, it seems to be short-lived.
Yeah.
So it seems to be able to make up for itself. Now, it depends on the news, right? I mean, when COVID happened, that
Mm.
was a huge rollover, and that took us a little while to recover from. But listen, we made a lot of money during COVID. So,
Yeah. But
the swings were nice.
COVID's a lifestyle change, right? The whole
Right.
world had a major lifestyle change right then and there.
Right.
Presidential election, depending on who wins Senate and Congress, it's gonna be like, oh, probably business as usual.
Yeah, I don't know. It'll be interesting to see.
Okay. Yeah.
I think it'll be interesting to see without getting in political.
I got you. All right, let's pivot. Let's go to. Could you pull up a gold chart?
Sure.
Look
So
at
this is
that.
my gold daily chart. We did have that low on the 10th of October, and you were talking about extensions earlier. We actually bounced off of an extension from, let's see, I know you like crosshairs, from that 30th of September low to the 1st of October high. And so I went from that low to that high. And we had that extension. What I say is many moves tend to terminate at extensions of prior swings. And that was an extension of a prior swing. We held, and continued that move up. We've met the first target at 27.33. Yesterday, I made a symmetrical projection for my clients. What that means is I look at a previous swing in the market and say we could stop here next. And that was from this low to this high, projected from this low. Let me see if
so that's kind of like a measured move, right? You're taking that line and you're kind of measuring
That's exactly what symmetry is a measured move. And we did stop there at 27.55, and we really haven't been able to bust it yet. But looks like we're wanting to. That's why I go down to these 30-minute charts. So this is my gold 30. And this morning, had this set up at 7 a.m. We hit and held a 382 retracement along with symmetry, which is a previous swing in the market. And I've met that first target on the upside at 27.56. Second one's 27.59. But this is why I say look at different time frames, because it looks like to me we're trying to push through, that 27.55. And once we do that, we get a little pullback on the 30-minute chart, which is also bullish, in order to enter a trade to continue this move up to that second target at 27.64. So a really great opportunity to be able to scalp.
I got it. So this is on a daily chart. When you go to you also have targets on a 30-minute.
Yes.
And does that reflect just kind of the different type of trade, swing trade versus position trade versus day trade?
Yeah, absolutely. Absolutely. But I mean, no matter what you're trading, I encourage people to look at different time frames because, when I have a setup like on gold daily, when I had that setup, when we came into that price extension, the 5 had crossed below the 13, which to me is a sign that, we could make a deeper downside correction, but we were still above the 200 and the 50 simples. But so what I told my clients is we're bouncing, but I want you to pay attention to what's going on the 30-minute chart, because at the time, the 30-minute chart had crossed over to the side of the bears. And I wanted them to pay attention to what the resistance was on that 30, make sure we can clear it before we're basically out of those kind of little rough waters on the 30-minute chart.
So the moving averages that I'm seeing there, those are, what are the numbers again?
Now, for the intraday charts that I run, they're 8 and 34. The blue is an 8 and the red is a 34.
Both fib numbers, by the way.
Yes, they're exponential moving averages. A lot of people ask me if something's exponential or simple. On the daily, though, we use 5 and 13 exponential, and then we use 50 and 200 simple.
Got it. Makes sense. All right. Well, it's a nice move. Yeah.
I was going to tell you, I do have information on the euro. I know y'all were talking about that earlier, but do you want me to show you what I've got? Let me show you what I've got. So we actually fell off of this 382 yesterday, and that was a sign to me. When I saw that immediately falling off that 382, I said, this thing definitely wants to make a deeper downside correction. When I see something fail off of a 236 or 382 retracement, it is a very clear sign to me. I've watched it for years and years and years now. Something else about the euro, it's below the 200, which is the pink dotted line. It's below the 50, which is the green line, and the 5 and the 13 are on a sell. So this is a complete bearish chart. However, I do have some price symmetry that we're coming into that I think is Really, really interesting to look at. So back here, we have this huge, see this, is it this one? This huge swing. So that
So
high
that's from
to
that's December 2023, right?
that is, I'm sure probably is. Let's
I'm
see.
sorry, I got my old eyes, can't see it too well.
So the 27th of December, yep,
Okay.
2023 to the 13th of February, 2024. So I take that and then I project it from the more recent high on the 23rd of August. And it gives me this symmetry that you see here at 1.08115. Those moves are exactly alike. So I
Wow.
really do like that for the side of the bulls. In addition, I have quite a few symmetrical, smaller symmetrical swings that are very similar to this current swing that we are in. So this swing is similar to this swing.
Okay.
This one, there's just a bunch of them. This one, they all kind of line up and they correlate with the second extension off of that more recent low to high, which is very similar to something that you saw on that gold chart, where we bounced
Yeah.
off an extension. So I also like that area. So anywhere from 1.07980 to 1.08004. And you could obviously couple that with the prices above it to have you a nice little setup zone there if you're looking to get bullish on the euro.
Yeah. Okay. I got it. Yeah. No, yeah, I hear you. I'm a little wary here. We'll see what the Fed does and ECB does, but
Yeah.
we're definitely in a surprise. This surprised me for a couple of reasons. One, because in the consolidation before the big rundown, I had to convert my dollars to euro because I went overseas. Now I'm coming back and I'm just getting ripped off both ends.
That's
So,
painful. I've had that happen to me before, so I feel you.
oh man. So we need a rally. I still have the euros in my pocket. I refuse to go to the bank to change
Hey,
them.
I get it. I get it. Hey, no reason to have to do it right now, right? Probably going to
Yeah,
go back to
right.
Europe anyway.
Oh man, that's awesome. All right, so this is kind of the story of the Euro FX. Is there any other kind of markets that you're like, all right, you got to pay attention to this, or are those the focuses you have so far?
Well, I mean, I've got crude if anybody's interested in looking at crude.
Yeah, we are.
So we're back above the 50 simple, so it's looking better. I'm not a big fan of where we bounced from here because it is an extension, but you saw what happened on the gold daily. I like to see us bounce from the red symmetry or either a cluster of retracements. So I don't really trust this bounce, which what that means though is that it could give you a good opportunity to be able to short crude. The next area that I have, because the 5 is below the 13 and we're still below the 200 simple, the next area that I have is 72.62 to 72.94. Now, these levels are only good if that 18th of October low stays in place. Now, I say that to say this, and I really like that next level at that 200
But
simple.
when you say stay in place, you mean we don't break down below that
You don't
temporarily.
break down below and take it out, because if you take it out, then those levels have to be recalculated.
Got it.
So anytime there's a new high or a new low, so if there's a new high, support has to be redone, and if there's a new low, resistance has to be redone.
Got it.
But if anybody decided to get short, I'd want them to pay attention to what's going on the 30-minute chart. This is what I was talking about with gold, because the crude 30 has turned over to the side of the bulls. And I actually had a setup yesterday around 11:30 Eastern, where it hit and held a 618 retracement, which is my personal favorite retracement. Hit and
Hmm.
held that one. And as you can see, it met both of the targets on the upside. And then this morning, I had some symmetry that it hit and held and bounced off of, and it actually met all 3 targets off of that little swing inside the swing. So this is kind of what I do. I mean, I just, constantly set things up over and over again based on what I'm seeing. Now, whenever I'm setting up this 30-minute chart, what I say is, please pay attention to the resistance on the daily, because it's not what you're going to see on the 30. What you see on a daily, you're not going to see a lot of times on an intraday chart. So, paying attention to different time frames is very, very, very important. So if you were to buy on the 30 on a pullback when we got close to that cluster of resistance that's a little higher, then that can mess you up if you're not aware of the resistance. So what I'll do sometimes for my clients is I'll try to put a lot of information on one chart, say, hey, this is what I'm seeing on the daily, this is what I'm seeing on the 10, just so that they kind of know what's going on different time frames.
So there could be a little bit of conflict between levels on the 30 and the daily.
Absolutely, of course.
Yeah.
Yes.
Yeah.
Yep.
I like
absolutely.
that. Could you go back to the 30-minute again real quick?
Sure.
Now, so and you identified that time frame, I think was at 1 o'clock in the morning or something, the lows where you hit your pink line.
Yes.
Well,
and that's 11:30 in the morning. Yes.
That's 11:30 in the morning. Okay, sorry. Again, I don't have my glasses on. So if you had target 1, target 2, target 3 before, would it be a trade strategy then? It's like, all right, I'm gonna do 3 contract trade. I'm gonna try to get 1 on each target and then trail my stop as I go, or is that kind of a personal trade idea?
I think that would be a very logical thing to do. Absolutely, without a doubt. Now, there again, if there's something going on the daily that you're not seeing on the 30, that's something that you would also want to keep in mind, okay? Because on the daily, you can see that there's a 50% and a 382 of these 2 larger swings that we've come up to around that 71.81 area. And you may not see that on the 30. So you just want to keep that in mind, that if you do decide to take off contracts based on extension targets, that you're also paying attention to maybe any clusters or anything else that's going on a different time frame.
Totally makes sense. So those targets are looser because of the conflict, possibly.
Yes, and what I prefer is, if you can use a trailing stop, but the problem with trailing stops is sometimes it comes down and it hits it, and then you're out and you miss a lot of profit. So
yeah, but someone very wise once told me you can't go broke taking profits.
I know, right? Never go broke taking that green.
Yeah, exactly.
That's what happened with me with IWM last week. I had a great trade, and I took it off, and I was still very happy with the trade, but I did miss out some. But it was a butterfly though, so I know y'all don't talk butterflies around here, so I had to worry about that theta decay too.
Yeah. Okay. So you made a good decision, and you're happy with the trade, you said.
Happy with the trade. I mean, you never take your profit. You know what? My husband told me one time, and he's so right. He's like, we get so irritated if we make $100 sometimes, trading. But if you're walking down the street and there was $100 bill laying on the ground, would you pick it up? And would you be the happiest person in the world? Yeah, you would. So why do we get so irritated when we make a certain amount of money?
Right. You can hand me $100 bills all day long. I'll be good with that.
Amen.
Yeah. So do we take a look at Nasdaq yet or no? Is that
I don't think we did. No, I have it though.
Let's check it out.
Here is the Nasdaq futures chart. Now it looks much different than the ES because the Nasdaq targets are from the larger swing are way up here from that 5th of August low, 22,239 and 23,514. I mean, right now we're still even looking for the smaller swing targets from the 6th of September low. Those are 2710 and 21,293. And then, I mean, we've got just a lot of little swings inside the swings, and you can kind of see where I set them all back up. I mean, that's what I do. I say, okay, here's a pullback, but we've made a higher high, right? So when we make that higher high, I have to set up the pullback again, even though the targets are still good from a previous swing, as long as we keep that low.
Are tighter targets indicative of a condition of the market or no?
For me, it is. I mean, when I start kind of seeing things are a little sideways, I start kind of scratching my head, seeing that maybe, we're looking for some sort of decision to be made here. Because, obviously consolidation means we're either get ready to rip higher or rip lower.
Got it. All right. So that's this is the daily, right, on the Nasdaq. Could you pop up a 30-minute real quick?
I don't have it done, but I can pop it up.
Okay,
I mean, I have it. I can take a quick look. It's looking, so I do have on my live charts, that I do in my trading room, which I have going right beside me here, because I happen to use that Zoom for that too. I've got a 120-minute chart that's got a lot of levels on it right now, but basically kind of what you're looking at here is it's very sideways. I mean, you've got a lot of highs, and this is where it kind of gets confusing to look at. And that's what I try to tell everybody. I'm like, you know, starts getting a little more confusing. But right now I do have a level 20,552 to 98 that is on my 120-minute chart. So if you are trading those NQ futures, please be aware of that level. And if you're on X, follow me at Trader Tammy 1. I'm the Fibonacci Princess. And what I'll do is I'll go ahead and pop that NQ chart onto my X here in a minute whenever we get done.
That's awesome. Yeah, I'm a follower on X. I appreciate all your good stuff on there as well. I'm Xing myself recently, trying to come up with some good ideas, but yours are awesome, so I appreciate those.
Oh, well, I'm so glad. Yeah, and I put that Euro chart on there yesterday also, and I'll update it, and I'll update some of these other futures charts, and I'll throw them on there for y'all to take a look at.
Awesome. So, Tammy, thanks for being here with us today. I'm looking forward to talking to you again. And that Twitter handle, by the way, is Trader Tammy #1.
Yes, Trader Tammy #1. Yes, Trader Tammy 1. Also, I will be at the Money Show in Sarasota, Florida. I think I speak on December 5th. But so if anybody's at the Money Show in Sarasota in the beginning of December, please be sure to come find me and let me know.
Yeah, any Ninja folks down there, say hi to Tammy in Sarasota.
Absolutely,
That's
please.
Awesome. All right. Well, again, thanks so much for your time. Looking forward to the next time we're together. Have a great day.
Thank you, Jim. Great seeing you again. Thank you for having me on.
The following presentation is for educational purposes only. All the symbols, trading ideas, and market commentary are for educational and demonstrational purposes only and are not recommendations or trading advice. Live sample trading occurs in a simulated environment. Past performance may not be indicative of future results. All the information and content presented is provided by NinjaTrader LLC, and the opinions expressed by all third-party guests are their own and are not necessarily those of NinjaTrader LLC. Trading futures involves substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.